Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast team, Carol Massar, and our chief space correspondent, Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide. And guys, where were you 24 hours ago with the great equity collapse of 2021?
I know. If you fell asleep and slept through yesterday, you're thinking, well, wait a minute. I don't know, sell-off. I was really concerned you were going to say Tim was a little spacey there, but not necessarily. We're taking another leg up here.
Yeah, I think what's so interesting about this, guys, is that even in the context of yesterday's big drop, which by the end of the day didn't end up being that big of a drop, we're still higher on the week. The S&P higher to the tune of the last 4 days. Remember, shortened trading week to the tune of 0.3%. The Dow 0.25% over the past 4 days, and the Nasdaq 100 up about 0.6%, even with all the red that we saw yesterday.
It really does feel that everyone wants to be buying back into the equity market. The fact that actually bonds are doing what they're meant to be doing today, Taylor, and for once bonds go lower while stocks go higher.
Yes, but that is price lower, yield higher. And I keep hearing from all the analysts, Romaine, that we speak to, that we are really right in the middle of that sweet spot where bond yields lower is a good boost for equities with that discount rate, but it's not too low where you're worried about economic growth. So you're only down 6 basis points on the week. Really nothing to see.
And I don't think we can be completely dismissive of yesterday. There is a tug of war here going on about folks who really are buying into the growth story, and other people are sort of looking the gift horse in the mouth and wondering when it's all going to come to an end, whether we sort of reach some sort of peak here for the economy and maybe for the markets. Who knows? But here's what we know for today. For today, you're talking about record highs, 43.69 and change on the S&P 500, roughly 48 points higher, 1% on the day. That's going to be good enough for a gain on the week. The Nasdaq also higher slightly on the week by about 0.4%. That's largely because of a 1% gain today, 142 points. The Dow Jones Industrial Average up 446 points today, up 1% here on the day, also good enough for a gain on the week. The Russell still in the hole, still in the red on a weekly basis, down about 1%, but for the day, posting a whopping 2% gain, Carol.
Yeah, pretty interesting. And if you look at the moves overall, it does feel like, generally speaking, for the week overall, we didn't do a lot, but on a day-to-day basis, we definitely did see some swings, Taylor.
And I have to say, as I usually do, when we take a look for our radio audience at the sector winners and the losers, it is all green on the screen. Here's the good news. There were no losers today. Let's start with some of the winners. Of course, with yields finally getting that lift up, some of the big outperformers are dividends, banks, insurance companies, energy. You're up anywhere from 2 to 3.5% as that reflationary trade really comes back into vogue. And you are seeing a little bit of some underperformance, though it's still green for our losers. You're up still 0.3% for some of the retail, pharma, hardware, household products, utilities, some of those bond proxies that typically don't do well when yields rise.
This puts a lot of pressure on Tim because he's got to come up with decliners.
Yeah. I know. It's a tough day for him.
All right. Wasn't so tough for me. A lot of gainers. S&P 500 down, NASDAQ and the NASDAQ 100 closing at a record highs. That's just crossing the Bloomberg terminal. So let's get to some of those gainers. Financials are going to be in focus next week with the big banks reporting. Discover Financial getting a jump start on it, up 6% on an upgrade over at Citi. They upgraded to a buy from a neutral, upping the price target to 150. Barclays also raising its price target. Chinese ADR is also in focus, rebounding after the Chinese government clampdown on its domestic social and data tech giants. JD.com up almost 4%. And then got to talk about Checkpoint Software, up 4.7%, upgraded to positive from mix by OTR Global Checkpoint, and it was a top gainer in the NASDAQ 100, Tim.
Well, even though there were so many gainers, significantly outnumbering the decliners, I was able to find a few. Let's start with Biogen, falling this afternoon after the news that the head of the FDA said she's seeking a federal investigation into the approval of Biogen's Alzheimer's disease drug, a highly unusual step that will increase scrutiny of a heavily criticized clearance. Space, we got to talk about Virgin Galactic. SPC down by more than 6.6% today. This coming ahead of Branson's flight on Sunday morning. Tune in, 8:30, 9 o'clock, Wall Street time right here. Bloomberg Radio and Bloomberg TV. Peloton finishing the day down by more than 5%. Look, it hit its low of the year on May 5th, but still up by more than 40% since then.
And from space to, well, the dollar coming back down to earth, guys. I'm looking at the FX market. We go cross-asset on the global macro movers. The dollar index off by 0.4%. Do we need a haven today? Apparently not. China seems to be talking up more stimulus for its particular economy, and we suddenly get a bid into particularly commodity-related currencies. Norwegian kroner up more than 1.25%, the Aussie dollar up 0.9%. Even Great British pound getting a bid, maybe ahead of that also important thing on Sunday, which is the English football. Meanwhile, commodities getting a bid across the board. WTI crude, of course, the dollar comes down, commodities go higher, steel goes up, Dr. Copper getting a bid. All of this speaking to, once again, the optimism around the world. And of course, you're therefore not searching for a haven in the tune of European bonds. Taylor, Norwegian debt, Danish debt, even Japanese debt, all falling today, yields pushing higher.
Same here in the U.S. We're up really by 6 basis points across the curve, particularly on the 10s and 30s. But this is a weekly look. And actually for the week, we are still down on the week by 6 basis points. But really incredible, the unwinding of some of that downward move that we see in yields, given the lift up today, but still overall down slightly on the week. And this really folds in, Carol, into gosh, some of the concerns that we've gotten with yields lower that really boost tech and people think it's good, but they're totally shrugging off some of the headlines from the Biden administration about those executive orders wanting to look at, quote, some of the bad mergers that have already taken place. And at least for now, big tech shrugging it off.
Well, a sweeping new executive order by President Biden. We were all on it today. 72 new different initiatives and proposals. It's all about increasing competition across many industries. He pulled in his cabinet secretaries, but it's also about helping out workers who it feels like have gotten lost when we've seen power in terms of a lot of companies getting bigger and their influence, but workers seem to have gotten lost and the advantage is not there, Tim.
Yeah, well, go ahead, Romaine. I mean, we did hear from the president earlier today.
Yeah, and I just want to point out, I mean, for our radio audience, we were showing on the screen here some of the bullet points from that proposal here. And I mean, we talk about some of the non-compete issues that certain employees in certain industries have had to deal with, net neutrality rules, also things just like sort of the portability of licenses from one state to a next. There are a lot of issues in what he proposed that really go beyond just big tech. It really is trying to sort of target, I guess, what you either smaller business or even just individuals and give them maybe potentially a little bit more power. I just also think it's significant here, Tim, that he's doing this all through executive order, really trying to make an end run around Congress and just all the divisiveness in Congress. It'll be interesting to see whether he can make this work, because there's certainly going to be some pushback by some of these industries.
Oh, there probably already is. I mean, look at the Chamber of Commerce is coming out and saying that there's not a problem with concentration. It's so interesting that Taylor said that the market's seeming to shrug this off. I had the same thought throughout the day, and we had David McLaughlin from the Justice Department, Bloomberg News reporter, on our show saying, well, look, now the tough work begins. When Biden made this announcement, when he signed this executive order, he was flanked by members of his cabinet, by antitrust officials. Now they have to go out and get this work done. And as Carol has made the point earlier in the day, an executive order can be undone by the next administration.
Yeah, it takes time for to become a reality, to become actual regulation as well, Tim. And notable, I'm sure if I was a McDonald's or Burger King executive today, I wasn't loving the news, nor if I was developing hearing aids. He really name-checked certain companies. I mean, maybe there is some secret sauce in those patties, but whatever the case, he feels is coming out fighting for the worker once again, for wages and against some of that price inflation. And inflation is exactly, of course, Taylor, what we're going to be hearing the likes of Fed Chair Powell talk about next week.
Yeah, we are. We're getting his testimony to Congress, I believe it is. We got that semi-annual monetary report. I think not really talking too much about things that we didn't already know, Carol, but it just goes to show how so much of this sort of inflationary wage pressure has been top of mind, not only for the Fed, but then, of course, as you go up the chain to the Biden administration as well.
Yeah, going before the House Financial Services Committee on Wednesday and then the Senate Banking Committee a day later. Top of mind, right? All of our conversations about what the Fed might do next. We'll see for Romaine if there's any kind of clues that we get from some of the comments and the questioning that he gets next week. Yeah, and it'll be interesting. I mean, obviously, you mentioned the CPI data. Of course, we get retail sales as well. And then let's not forget, guys, I mean, we have a huge earnings season kicking off here. Obviously, the numbers themselves, I mean, they'll be parsed for however people want to parse them. But at the end of the day, it's really about the commentary we hear from some of these CEOs on the conference calls about how they feel about the economy, how they feel about wages, how they feel about some of these inflationary pressures. I think that'll drive this market and drive sentiment in one direction or another. Yeah, especially those comments about looking forward for the remainder of the year, for the current quarter that we're in, from those bank executives that we expect to get next week. Nadia Lavelle, senior U.S. equity strategist for UBS, was just on air, and she said that when we look at growth expectations for the second quarter, she said they're too low. She's very bullish.
Very bullish. Interesting that they're so bullish, given that the banks were singled out by the executive order to a certain degree as well. But Taylor, I think what the banks are going to be loving, and the mood music for financials, one of the best performing sectors today, was because yields went higher. And well, that's largely because we've got some auctions, some supply of US Treasuries next week.
I love when Caroline always comes to me on yield. She now knows, Carol,
I
don't
know
ever
her sweet
come to
spot.
me on gold or anything else. You only come to me on yield.
It was
and I
a
will
gift, a
behave.
Friday gift.
Tim, you got to talk about this space thing, because
I'm excited.
I was told we had someone on a little bit earlier, Ed Ludlow, who I believe is going to be up in
He
space
is.
covering this as well.
Yeah, he'll be in New Mexico, not
space.
space.
It's
No,
not going to
feet
be over
firmly planted on the
camp.
ground.
It's the definition of space is up for debate right now between Jeff
Is it up
Bezos
for
and Blue
debate?
Origin.
According to
It
Blue
is,
Origin.
it is.
All right. I love the fights that billionaires have. All right,
Yeah.
that's going to do it for our cross-platform coverage right here on Bloomberg Radio, Bloomberg TV, and Bloomberg YouTube.
Have a great weekend, everyone.
You too, everyone. Watch it on Sunday. All right, we'll see you on Monday, same time, same place.